Hello and welcome to the crypto update. So what's happening? Well, there can only be one headline today and for this week. Bitcoin has reached new all-time highs. Here we see Bitcoin crosses 111,000. Its previous all-time high was about 109,500 roughly. Now it's actually, Bitcoin has continued to rally and surpass 111,000, hitting around 111,880 or thereabouts for the first time. So huge news, big movement. What's caused this movement? Is it retail coming into the market? No, clearly this rally is fueled by corporate treasuries, ETF demand, and Wall Street finally stepping in. So what's been happening? We've seen BlackRock IBIT ETF pulled in over 530 million just yesterday alone, and that's more than 10 times the amount of Bitcoin mined that day. We can see the amount of Bitcoin becoming available. We've had the halving last year, so it's reducing what's coming out month on month, and at the same time we've seen massive growth in the requirement for Bitcoin. We see the total ETF inflows for May, just May, have topped 3.6 billion, pushing total assets past 122 billion. JP Morgan is now offering Bitcoin to clients. Why is that news? The same JP Morgan that once called crypto a scam and many other things. Public companies like Strategy, Metaplanet, and 21 Capital are all accumulating Bitcoin en masse. Strategy alone now holds 576,000 Bitcoin. There are now 80 companies public companies that are publicly have a strategy to acquire more Bitcoin. That number will grow, and the number that are buying it, the amount they are buying will grow. So it certainly seems that, once again, Bitcoin is absolutely the king. It's moving up at a really rapid rate. How does it hold as an asset overall throughout the world? Well, gold, of course, is by far and away the biggest asset with over 22 trillion. But then you go to the biggest companies in the world, Microsoft, Nvidia, Apple, all exceeding 3 trillion in value. Bitcoin is coming in closely behind. It's number 5 now in the world, bigger than many of the biggest companies in the world, at 2.16 trillion. This would mean that if it were worth 170,000 right now, it would be the number 2 asset behind gold in the world. Just incredible stuff, incredible movement, incredible adoption of Bitcoin, something that was laughed at for so long, put down for so long, legislated against for so long, is now the 5th biggest asset in the world and climbing quickly. We see Texas legislature passes Bitcoin strategic reserve bill. Texas becomes the second US state with a Bitcoin reserve after New Hampshire. Texas, though, has the world's 8th largest economy. So big things happening and happening quick. So is Bitcoin a risk on or risk off asset? Why am I asking that question? Well, in recent times, when the Trump tariffs came out, the stock market crashed significantly, down 15-20%. But Bitcoin also behaved exactly like a risk-on asset, and went from 105,000, 109,000 all the way down to 74,000. So it had a significant correction, just like the stock markets. On the other side of that, we've seen the bond market having a problems lately, and Bitcoin has grown during that time like a risk-off asset. So which one is it? So what's been happening? Well, in the bond market, there's been chaos. We've had a weakening dollar. Rising geopolitical tensions have investors looking for a safe haven. What's unusual, usually a boring corner of the market, just spooked investors. What's that? There was an auction for the 20-year treasury notes, saw weak demand based just last Wednesday. So what's happened here? So as happens very regularly, the US sell treasury notes in order to fund the government. And usually this passes off without note. What's happened here? Well, the 20-year treasury, usually forgotten, almost boring, suddenly matters to the markets. The US tried to sell 16 billion worth of it, yet traders barely showed up. So what's going on? So on a regular basis, the government sell these bonds in order to raise money to run the country. And usually this goes off without question. And there's plenty demand for those same bonds. However, there's been a real lackluster go towards this latest sale of just 16 billion. Now, 16 billion is a really small number when you consider that the US government need to roll over, refinance $9 trillion of debt this year. So if they're having issues selling just 16 billion worth, what's the likely chance they're going to run into even bigger difficulties with these bigger numbers? And what happens is if people don't want to buy these bonds, if they're thinking, actually, this is getting a little bit risky. Do I really want to buy these bonds and get 4.5% on these bonds for taking the risk of buying these bonds? Well, normally, and certainly over the last number of decades, it was seen as the safest thing you could buy, and therefore you got a really low rate, but it was pretty much guaranteed. Now, it's being questioned whether that is as solid as it was. And so what happened was the 20-year yield spiked to 5.125% on Wednesday. It has been at 4.5%, which is basically people saying, I'm happy to take the risk of buying these bonds as long as I get 4.5%. It was seen to be a high interest rate. It's just gone over 5%. This could cause real problems. It's said that the US government were trying to get the bonds to, the percentage to reduce so that it would be cheaper to roll over their 9 trillion debt. Not to mention that these are the numbers on which mortgages, loan repayments, and other financial markets are all based. The higher this is, the more expensive it gets for everybody to get loans, including corporates and individuals. This puts pressure on the market outside and could have real effect on the economy. So these numbers make a real difference. Off the back of that, we saw the stock market start to pull back on the back of all of this. However, Bitcoin didn't. Meanwhile, the VIX, the Wall Street's fear gauge, jumped by 15%. That's a pretty significant jump. So lately, under the Trump tariffs, it jumped up, from in around 15, 16, 18%, all the way up to 52, and actually hit off 60 during the days after the Trump tariffs were announced. Then, when deals were getting done and some pullback from the government saying, we'll, take 90 days to do the agreements. We've seen a UK deal of sorts, a China deal of sorts, which is basically the deal is we'll leave the deal go for another 90 days and see what happens. But since this has happened, it's gone up 15%, which is a very significant jump. The markets have reacted negatively. Why is this happening? Well, there's 10 downside risks to the US economy. In other words, why is the rate going up? Well, people are seeing it as being more risky and they need to get a higher percentage to take that additional risk. Why are people thinking it's more risky? Well, Moody's downgraded increasing borrowing costs for US consumers and firms. So Moody's came out and downgraded the US debt from AAA rating to AA1 rating. Now, it's still really top tier, but it's not the top tier, and they've put out a very clear signal to say it is now more risky. The ongoing negative impact of tariffs on earnings, trade deal uncertainty and trade war retaliation risks, extremely high uncertainty for business planning and weak corporate confidence. Of course, it's impossible to make any sort of plans within a business at the moment. Do you spend a lot on capital, use capital to spend on capex, or do you hold your money back? Do you import stuff right now, or do you wait for tariffs to change? It's just massive uncertainty. What's the price going to be of refinancing loans? Is it going to be higher? Is it going to be lower? Huge uncertainty out there. Consumer spending slowing because of higher prices in stores such as Walmart. Walmart have come out and said we are going raising prices off the back of tariffs. Historically weak consumer confidence. You can understand why the consumers are having less confidence about going out spending their money now. Many, when there's uncertainty, save. They don't spend. This doesn't help the economy. Lower tourism. Student loan payments are restarting. So there was a moratorium for a number of years. That's gone now. Housing demand weakening because of higher mortgage rates. Mortgage rates are getting higher because bond yields are getting higher. And Doge laying off government workers, which means it's increasing unemployment, which of course is not good for the economy either. So these are many of the reasons why the bond market is now starting to move up. And bear in mind, when Trump came in his first term, he was going, judge me by the stock market. If the stock market's doing well, we're doing well. He didn't say that this time. He wasn't talking about the stock market. In fact, he hardly mentioned it. What he's been mentioning is the bond market. Watch the bond market. We want to reduce interest rates because we need to refinance. Plus, of course, it reduces the borrowing costs for corporate and individuals as well. But it's going the wrong direction. And here we have an indicator of where things are at for the individuals. We can see Now that the orange line here, that student debt is no longer on pause, you now need to start repaying, we can see the delinquencies literally shooting up in a straight line. You can see credit card debt delinquencies also shooting up in a very straight manner. We're starting to see auto loans start to creep up now for the last number of months. And likewise, we can just see mortgages also on that turn and heading upwards again. It doesn't look good for the consumer right now. If the consumer's under pressure, they're 70% of the overall economy. If they pull back, the economy pulls back. So on top of that, we're seeing more and more shoppers are struggling to repay their buy now, pay later loans. I mean, who couldn't have predicted this? They are now giving loans to people for everyday things like going to a restaurant or buying your food. If you're having to borrow to do those very basic things, that wouldn't suggest that the consumer is in a healthy position. However, we keep getting told by the Fed and others that the consumer is in a great position. It seems unlikely when you see the headlines like this. And so then back to Bitcoin. Bitcoin is at an all-time high and retail doesn't care. Google searches is at an all-time lows. Normally when Bitcoin moves towards and hits all-time highs, it's because retail has come into the market and it creates a huge interest in the wider individual out there to go, what is all this Bitcoin about? I'm seeing it in the news, and they start to buy into it. It's already at all-time highs and none of that is happening. What does this all mean? So back to the question, is Bitcoin risk on or risk off? And depending on that answer, what does this mean for altcoins? Well, I'll get into that and more on the next video for our private members. You want to become a private member, make sure to have a look at what you can get at www.wealthofwisdom.io. In there, there's loads of free information, but you also get insights, crypto tips, and so much more. And of course, our insight as to what we think is going to happen next. We'll see you there.